All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, April 13th. It is about 9 p.m., a little bit later than I normally do this video, but better late than never. Starting off, recap of last week's trading, ended up having 12 total trades, 8 wins, and 4 losses. You can see my futures trading here ended up getting $7,850 in gains from futures trading. Also had an additional $2,271 from option and stock trading for a total this week of $10,121 gain. So, moving out to the charts, taking a look at where we are, where we ended last week, and where we think price action is going to be heading. Had a significant bump. This candle here actually was one of the single biggest day gains that the stock market has ever had. And that came on the back of news that the White House had paused on the tariffs that they had put on for all of the different countries around the globe for 90 days. So 90-day pause on that. Markets reacted huge. And what this basically told me is there has been a ton of money on the sidelines looking for clarity. And even though we are not by any stretch of the imagination out of the woods in terms of tariffs and trade wars or recessionary fears or inflationary fears that has already been there, but what this candle told me is there's so much money on the sidelines that any hope that we can get is going to be reason enough to give people the confidence to go back in at least short term. Now, I am not thinking that this is the bottom yet, but I would not be surprised to see a little bit more upward momentum in the price, probably coming up into this 550 level. So on the S&P 500, I am looking at prices probably coming back up into around the 550 level, and then we're going to have to reassess. That could honestly happen in a single day, Monday or Tuesday. I wouldn't be surprised to see us push into that level, but we need to see what price does when we get there. Do we go sideways for a little bit and build a little bit of a breakout channel here that we can get back up above and trigger on a good trade for? Or do we stall out and see momentum stall and see prices start to depreciate? So that 550 level on S&P is going to be really, really important in that determining factor. Going out to the triple Q, basically rinse and repeat the exact same thing. The price level I am watching for in this is going to be 466. If we go out to IWM, the price level is going to be probably a little above the 20 period moving average, somewhere around that 200 range is the price point where I will start to get a little bit more bullish and have a little bit more belief that the bulls are in more control. Going out to the Dow Jones, we've cleared the 9 EMA. We are back into a bullish indicator on our trailing stop ATR indication. We've come back out of oversold territory on our RSI. Our MACD is still in bearish territory, but we are threatening to cross here, and that is the first indication of stabilization on our MACD. On this, probably needed price to get back above 410 before getting too excited, but we do have these diagonal resistance lines just above that on pretty much every one of these charts. So if I go back through these indices really quick, we do have some diagonal resistance just above that price level of 200 on IWM. On the triple Q, if we go out, we would be looking at just above the 466 level that I called out. And then again on SPY, if we draw on a diagonal super quick, it would be just above that 550 level. So there's kind of a zone here on each of these charts that we need some price development at before we can really call our next shot. Right now, I'm entering this week not super interested in doing a whole lot in one direction or the other than just short-term day trades, just because we're kind of in the middle of this big drop and also this big pop. And until we have some stability and clean that up, it's going to be hard to have a clear read one way or the other on the market. So now that we've gone through those four major sector ETFs, let's drop out to IBIT. Checking out IBIT, clear out these drawings, make this a little bit easier to read. We did end up actually breaking above our shorter term diagonal that was right here. We then formed a double bottom right here and held the 200 period moving average. We closed one day below it and then fired back off and have held above ever since. This has given us a chance for our moving averages of shorter duration to actually start curling and starting to flatline, which is the first step to a recovery. So if price can break out above this diagonal resistance, next stop would be back up to the 50 period moving average in this previous pivot high. So I am putting the line in the sand at $50.50. If we get above 50.50 on IBIT, that to me is signaling the bulls are back in charge and would probably lead to a fairly significant run back up towards our highs around $60. Going out to Ethereum. Ethereum has not had the same movement that Bitcoin has had, but it has at least had a little bit of stabilization here. So I'm not super convinced on Ethereum yet. It does have further to run if it does, in fact, find its footing and start to turn around. But our moving averages are still trailing down. They are not flatlined yet, and we need more development here. So I am marking ETH as a stay away for the time being. Going out to XLB, our materials sector ETF, we are knocking right at the door of this all-important 9 EMA. If we do break and get above that, I would assume the price is going to come back up to 83.75 or $84, back up into this support and resistance zone previously and where this break occurred that led to the big drop. Again, I'm not super interested in establishing longer term positions here, so anything that I do on any of these charts this week is going to be short term, but I could see a pop up to that decreasing at 20 period moving average. Going out to discretionary. Discretionary, we have a bit of a descending resistance line here. If we toss this one out to a weekly chart, you can see that we are bouncing on top of the 200 period moving average and sandwiched between it and the 50 period moving average directly above us at just over $200. I'm not super interested in this one for longer term plays until we get back above that 50 period moving average. I'm kind of expecting a bit of chop in between 180 and 200 on consumer discretionary. Going out to XLK. XLK, there was news today that broke actually that China is backing off on some of the tariffs that they were going to implement, and the US is actually backing off a little bit on some of the tariffs that they were putting on China, specifically for tech stocks and materials specifically that are needed for semiconductors and things like that. So it'll be interesting to see where this opens tomorrow. I wouldn't be surprised to see a little bit more of aggressive buying in the technology sector compared to other parts of the market this week. But again, we just need to see stability more than anything right now in the market. Going out to energy, energy just got absolutely murdered on this drop. If we toss this out to a weekly chart to see a little bit more of what's going on, we closed below the 200 period moving average, and I'm not interested in anything on this until we get back above that 200 period moving average. If we toss this out to a monthly chart just to see where we are, we're also sitting right on top of the 50 period moving average and kind of in line with some of the support here and resistance here at that same level going back even 9 or 10 years. That price point has been very important to the market. So it's going to be interesting to see how price develops at this $78 to $79 level, because that has been a line in the sand numerous times in the past. So right now, probably sitting on my hands this week. I might be tempted to play a bounce if we do reclaim this 9, but until then, I'm going to let this sector develop. Going out to XLU. XLU, this bounce has not even cleared the 200. This is going to be a very important price zone, but even if we get above the 200 period moving average here, we then have the 20, the 50, and our diagonal resistance overhead. So this is an absolute stay away to me for any bullish trades this week. If we do have news coming out of additional tariffs or negotiations falling through or anything like that, I might be interested in shorting, but I'm definitely not a bull in utilities. Going out to consumer staples. Consumer staples had a really big bounce, came back up, cleared the 200, and now are knocking on the door of the 50 period moving average here. But overall, in pattern development, this has just been a choppy mess for 6 months now, and I am just not interested in playing in messy conditions, so I am moving on. Let's go out to communications. Communications looks very similar to utilities, had this bounce up right into the 200 period moving average, rejected, but now we are starting to form a little bit of support. We had a big wick down, fought back up, and then Friday's candle was just kind of an inside candle here. We do have room for more price appreciation to come on our RSI. The MACD is still in bearish territory, but it's threatening to try to cross over. So on XLC, I am going to be basically in a wait and see mode. Can we get back above 93.50? And by the time we do that, do we have enough time for this 20 period moving average to converge into that zone? If this 20 period moving average converges into that same price zone around 93.50, then a breakout of that to the top side will look much, much more interesting to me moving forward. But until then, it's a wait and see. Going out to industrials, rinse and repeat basically what you've seen on all these other charts. We still have our diagonal resistance overhead. We have quite a ways still to be able to get up to that, but we have a bunch of moving averages in the way. To me, this is a theme on pretty much all of these charts is patience plays and patience is a position. Going out to XLF, XLF, we're knocking on the door of the 200 period moving average, have some room to potentially see more price appreciation on the RSI. MACD in bearish territory. If we toss this out to a weekly chart, we did fight back and reclaim the 50 period moving average here at around 46.20, so about 50 points below the close of Friday. And this is a very, very important price level. You can see right there, this is a double top M for murder pattern that broke, closed below it, and then on the reversal of the tariff news, we blasted right back up into this zone, and it should come as no surprise that this really important support and resistance level caught prices there and stopped it from moving higher. So now we are just in development phase and we need to see some consolidation to allow these moving averages to come down and converge into this zone before we get too excited for any further potential gains. Going out to healthcare. Healthcare is just grinding on its 9 EMA. I don't have a strong read on this one way or the other. I wouldn't be shocked to see price come back up to around 142.50, somewhere in there. But I think there are better opportunities in the market than this, and I will probably be sticking to just the major 4 indices and day trading this week moving forward. Going out to gold, gold gapped up on Friday, is now at a new all-time high, and is overextended on our RSI, but in the conditions that we are in currently, gold can still run, and it can run harder and faster than people give it credit for sometimes. So I have a feeling we are going to see a little bit of consolidation here and probably resolve to the top side moving into the next couple of weeks. Going out to silver, quite the opposite of gold. It ended up just getting absolutely murdered on that drop and popped back up, but it still has some moving averages above it, and it still has a ways to fight back up into the 6-month high here. If we toss this out onto a longer time frame chart, put it out to a weekly time frame chart, you can see our high here at 31.80. So now we are just kind of stuck between this support, rising support zone, and our horizontal up here at 31.8. So depending on what kind of news we have coming out to the market this week, it's anyone's guess on this. I'm assuming that we are going to gradually grind higher on it as long as tariff news stays subdued. Not sure, honestly, if I'm going to be tempted to play this or not, just because it's in the middle of the range already. It doesn't look like a particularly great entry to me for bulls or bears, so I'm probably a stay away on that one. Going out to our heat map here, let's check the 1 week performance. Get rid of the ads. There we go. So this is showing the gain or loss on the S&P 500 for individual companies over the last week. And we can see healthcare is the one standout to the downside that just could not recover enough to end up logging a good week. But pretty much everywhere else in the market, other than healthcare, maybe energy, and a little bit of mixed results in real estate. Everything else ended up having a fantastic week. And I'm assuming, again, as long as we have stability in the news and Trump doesn't do anything stupid and other countries don't retaliate further on tariff news, we should be in a stable environment going into this coming week. Finally, last but not least, let's go out and look at our Forex factory. Refresh the page here so we have this coming week up. Monday, we have FOMC member Waller speaking. Not super interested in that. The Empire State Manufacturing Index, I could take or leave. So Monday and Tuesday, light on news. Wednesday and Thursday are going to be a little bit more important to the market. Wednesday in particular, core retail sales and Fed Chair Powell speaking on Wednesday, both of which have opportunity to move the market. One is at 5:30, the other is at 10:30 Pacific Standard Time. And then Thursday, 5:30 a.m. before market open, we're going to have unemployment claims. So a lighter week this week that should lend itself to technical trading instead of news-driven trading, at least for economic data. And then just make sure you are monitoring any news out of the White House in terms of further developments on trade tensions. So with that, guys, as always, trade safe. Let me know if you have any questions and hit me up in the comments if you do, and I will get right back to you.